Good evening, good evening. Welcome to a new weekly Wednesday webinar. It feels good to be back. As you can see, we got Lil 10, Milton approved my time off, I guess. Maybe it was Milton, maybe it was somebody else, but I know I had some time off and it was well needed. But of course, every time I'm in town, every time I'm in Virginia, for those that don't know, I'm from Virginia. I need to log in, to be part of the weekly Wednesday webinars. And it's a pleasure to be here with you. Thank you so much for all the attendees that are already connected. If you know of somebody that wanted to connect, or if you know of somebody that might be interested about this topic, please share the registration link. I'm sure that we still have plenty of room for everybody to join. Tell your family, tell your friends, tell your neighbors, spread the good word that we have to share with you all. And as you can see, the topic on the screen is understanding credit reports and scores. As you know, credit is a little bit tricky. Sometimes people look at it as having too much debt is good credit. Sometimes they look at having minimal debt is good credit. So we're going to explain everything that goes behind the scenes when it comes to your credit score. How come it's easier to go down on your credit score, but it's hard to make up those points? So please make sure that you stay tuned for, the amazing things that we have to share with you. And I do see some familiar names on the attendee list. So thank you so much. If you're a regular, thank you so much for being here with us. And if this is your first time, we hope that this is not your last and that you can make this an ongoing thing because we do these weekly Wednesday webinars at the same time on the same channel every single Wednesday. And as you can see, the panelist team is ready. This is that OG crew, as Milton was calling it earlier. I was thinking about that too. So this is the crew that started it all, a few seasons ago, and now we're here, celebrating new topics, new surprises, 2026. It's full of surprises for you all attendees. And something I want to emphasize is that without your support, this wouldn't be possible. So thank you so much. And of course, we want to be engaging with you all. We want to make this a conversation. We want to make sure that there's a lot of interaction. So if you have any questions, any concerns, or anything that you would like to tell us, please make sure that you use the chat feature or the Q&A. And then Miss Andrea Londono, our question expert. What is our commitment with all those comments that we receive from the attendees?
That will answer each and every single one of your questions here tonight. Or if we don't answer tonight, we're gonna email you the answers.
Woo, drop the mic. After that, I don't want to say anything else. She said it all. We're going to answer those questions live. And if we don't have the answer for you, or if we don't have enough time, we're going to do a follow-up with you all. So once again, thank you so much. We want to make this very interactive, very engaging. Let's have fun and let's learn together because financial stability may give you that peace of mind that you're looking for. And with all of this that I said, this is not the official introductions. We do have an expert that does the official introductions. So, Mr. Milton Aguilar Bolanos, I want to pass it on to you as our membership development officer with the actual and official introductions. Take it away from me.
Hey Eddie, we give you 2 nights off, and you all of a sudden forget my title. I see how it is, but welcome back. We're so excited to have you back. It's been great, and again to everyone that is joining us, we're so delighted to have you here in another weekly Wednesday webinar. Like Eddie stated, it's all about understanding credit. So credit 101 today. It's going to be an exciting presentation. It's going to be a fun one. So as Eddie alluded to, we love to have your participation. So please make sure that you drop in your comments, questions in the chat or the Q&A. And you heard it from Andrea. It is our commitment that we will answer every question before we let you go this evening. So with that being said, let's go ahead and dive in with the official intros. Again, you already heard his voice. He had two nights off, so I can't believe that two nights off. But he's finally back, Mr. Eddie Villanueva from the marketing team. Also from the marketing team and in charge of reading all your questions at the end of the presentation is none other than Andrea Londono. Thank you, Ms. Londono. And the person in charge of making us look pretty every single presentation, Carrie Lazar from the marketing team as well. And we're so excited to bring her back again as she has been off not 2 nights, more like 2 months off. And that is none other than Kim Freely from the Membership Development Team. So we're so excited to have Kim Freely back. And what a way to bring her back than doing this presentation for us, understanding credit. So, Ms. Freely, it's all yours. Take it away.
Thank you so much, Milton and panelist team. It is great to be back. So welcome everyone to this week's Wednesday webinar. Happy Wednesday. We're so appreciative that you're spending a little bit of your Wednesday evening with us. We have a lot to cover today, and it is all key to understanding your credit report, your score. We're going to start out by talking a little bit about why credit is so important. We all know on this call that credit is so critical to really our everyday lives. So then we're going to look at credit reports, what's on them, how to understand what's on them, how to obtain yours. What's the best way for you to get that into your hands so you can review it, make sure everything on it is accurate. And then we're going to talk about how credit scores are calculated. What goes into that score and how can I improve it? What makes it go down? We all know the higher your score, the better interest rate you're going to get, or you're going to be approved for certain things. And then how to build credit. You might be on here and be brand new to the lending world and borrowing. Hopefully we can help you understand and know how to build your credit. And we're also going to talk about a couple of common credit myths before wrapping up with some tips on actually using credit cards wisely. So let's go ahead and dive in as to why does it matter? Why does your credit matter? Before we get started on the ins and outs, we're going to talk about this and consider why credit's important in the first place. So if you want, drop into the chat things you have needed credit for previously, or examples. You don't have to do this, or examples of things that you have been held back from by not having enough credit. Sometimes we pay cash for things, and because we think, not having credit is the best way for us to get credit, and it's actually a little bit of the opposite. So if you want to engage and put that in the chat, feel free. So I don't know if you're aware of this, but having good credit could actually help you land your dream job. I think last year when we did this webinar, 38% of employers did credit checks. Now, since I think October of 2025, 50% of employers do credit checks. Now, this does not mean that having bad credit will prevent you from finding a job, but it could be used in determining whether or not you're going to get the job that you want. Especially, it totally depends on the industry, right? If you work in finance, like we do here at the credit union, it could be a big factor. We are advising and educating our members just like we're doing tonight. So it's important that we ourselves as employees are financially well, as well as it could be you're applying for a job requiring security clearance. For example, let's just say you wanted a job at an airport, TSA, Transportation Security Administration. They're going to do a credit check on all prospective employees, every single one. And if you owe, this is really, really helpful for lenders. If you owe $7,500 or more in unpaid debt that is in collections, TSA will only hire you if you show a plan to repay that debt. How outstanding is that? And then we all know, or you might not know, that your credit can come into play if you plan to rent or buy a home. And even though renting doesn't actually involve borrowing money like you would to purchase a home, most rental management companies still want tenants with decent credit. Why is that? It just indicates that you are more likely to pay your rent as agreed on a monthly basis. If you are purchasing a home, on the other hand, credit is going to play a huge part in determining if you're eligible for a mortgage. And then finally, having good credit might make the difference in getting a loan when, sometimes you just need a loan, right? Have you seen or heard advertisements that say, these big billboards, these commercials, bad credit, no problem? While these places can often approve people for a loan, it's probably going to be at an extremely high interest rate, one that most people, I immediately think of our younger generations who are trying to establish credit. Hopefully they're not going to, I still call them loan sharks. You might get an auto loan, at a 25% interest rate. I think ours right now here at the credit union with the relationship discount is 4.24 on a new loan, on a new car loan. So definitely don't want to get yourself into a situation where, you might pay double or triple what someone with good credit might pay. It's so important. So on the next slide, we are actually going to take a look at two people who are applying for a mortgage. I love to give examples. So for sake of discussion, we are going to say that all the underwriting pieces for Diego and Angela are equal. So their amount of income, their stability of income, etc. That's all the same for them. While Diego and Angela may both get approved for a mortgage, we're going to look at how the difference in credit scores impact the terms of the loan. And so you see Diego has a credit score of 660. Angela's credit score is 750. Diego is going to get a mortgage rate at 5.25. Angela's going to get a mortgage rate at 4.63. You can see their monthly payments, and you can see how much, once they pay that 30-year fixed rate off, how much they're going to have paid totally. While it may seem like a big difference, spread over, it may not seem like a big difference spread over 30 years on a loan. A difference in credit scores can actually translate into tens of thousands of dollars. In this example, having a higher credit score saved Angela $34,258. So Diego might want to maybe consider focusing on increasing his credit score, especially before, going out and thinking about buying a home. Often people are eager to buy a house because they really don't want to miss the boat, in terms of low interest rates. Mortgage rates right now are coming down. Or low real estate prices. However, if you jump into a large purchase before you're ready credit-wise, it may make your dream home become more of a nightmare with that mortgage payment. And when you look at the long run. So now let's talk about credit reports. As we all know, credit reports contain some of the most important pieces of information creditors look at when determining, if and at what terms they are willing to extend credit to you. And there are three major credit bureaus that collect your information and generate credit reports. They are TransUnion, Experian, and Equifax. And when it comes time that you're ready to apply for a loan, different financial institutions may review different credit bureau reports. One might review TransUnion only. One might, like we here at the credit union, we pull Experian. There could be another financial institution that uses Equifax. In some cases, like when you apply for a mortgage, because this is a really big life event, the lender is probably going to pull all three. This is the part of why it's so important to be on top of what is reporting with all three credit bureaus. And it is highly recommended that you review your credit report from all three bureaus at least once a year. Different information may report to different credit bureaus. You want to be able to see that. In many cases, the information could vary slightly, as some creditors who you borrow from may only report to one bureau versus another creditor may report to all three. And they all may report at different times. Usually it's monthly, but you just don't know the day that they are going to report it. So what's on your credit report with each of these three credit bureaus? First, your credit report contains your identifying information. It's going to include your name, your social security number, your date of birth, your address. Sometimes it even includes your employer. Depends on if that employer actually releases that information to the credit bureau. And this is used so that whoever is accessing your credit can simply match up your information. This is exactly who we're speaking with or who we have in front of us. The personal information is not used, though, when calculating your credit score. Second, on the credit report, credit accounts. This includes credit cards, personal loans, auto loans, mortgages, student loans if you have them, and any and other types of debt. Your credit report will contain information about when you opened the account, if your payments have been made on time, or if they haven't been made on time, your remaining balances, your maximum credit limits. Payments will show up as late if you are 30 days or more past due. So you never, ever want to pay a loan on that 31st day, because it will stay on your credit. It will be on your credit, be reported on your credit report, and the length of time that it will stay there is not worth making that payment late. So other household bills like utilities, rent, generally those things do not show up on a credit report. However, if you were to stop paying on any of these bills, they can be referred to a collection agency. And once in collections, the collector can report the debt, at which point those outstanding debts would appear on your credit report. You don't ever want that to happen. And if you do, we're going to talk about how to clean that up. Because things happen, right? We talk about life happening all the time. It's not a matter of if, it's a matter of when. So under the Fair Credit Reporting Act, debts can generally appear on your credit report for 7 years, and in a few cases, actually longer than that. So public records, which are things like bankruptcy, tax liens, judgments, they can actually stay on your credit report for 7 to 10 years. And then finally, anytime someone accesses your credit report, it is called an inquiry. And these types of inquiry, there are two types of inquiries. There's a soft pull of your credit report. There's a hard inquiry. The hard inquiry, which is anytime your credit report is reviewed for the purpose of extending credit to you, if you apply for a loan, is going to be reported on your credit report. A soft inquiry are things like when you check your own report, we're going to talk about that, or when a current or potential creditor wants to make you a promotional offer. While both hard and soft inquiries may appear on your credit report, only hard inquiries impact your credit score. So they could both show up as an inquiry, but only the hard inquiry could impact your credit score. So let's talk about what is not on your credit report. Your credit report is not going to contain information related to how much you make, your income. It's not going to report your assets. It's not going to report how much you have in your savings or your money market or a CD. So a person can have excellent credit but no savings. Or on the other hand, they could be very wealthy, but actually have poor credit. So this is why lenders will often look at all of the pieces of a financial picture. We call it full underwriting. They'll look at your income, asset, savings, credit, not just your credit score when making those lending decisions. And that's why we always say that a credit report is not stating that it's a financial health score. It's not. It's not a full financial health score because your income, your assets, your savings, all of those things actually factor into a financial health score. So your FICO score is not a full financial health score. So there's no requirement actually in the Fair Credit Reporting Act for credit reporting agencies to remove positive information, such as you made on time credit payments. They can remain on your credit reports indefinitely, especially if the account remains open and active. Even after a positive account has been closed or even paid off, it can still remain on your credit report for as long as 10 years. So having more good information definitely helps strengthen your credit history and increase your credit score. There is no requirement. Sorry, bear with me just a second. Okay, so it is really important that the information on our credit scores, on your credit score, is accurate. We cannot say this enough. According to a study conducted by, we always use FTC, the Federal Trade Commission, 1 in 5 people have an error on at least one of the credit reports. So let's talk about how to get a copy of your credit report. It is recommended that you review your report at least once a year, but honestly, anymore, I would highly recommend that you check your credit report at least quarterly. I mean, now you can actually pull your credit report once a week completely for free. You just want to make sure everything's accurate and ensure you are aware of everything that is reporting on there. You have the option of getting all 3 reports at the same time. So we highly recommend that you look at those, you make sure that what it is reporting is actually accurate. It's so important. And we do have to advocate for ourselves, right? I mean, anyone, even lenders, can make mistakes. So the recommended place to get your credit report is annualcreditreport.com. It is the website that was set up as a result of the Fair Credit Reporting Act that states that you are entitled to receive a free copy of your credit report. During the pandemic, credit reports were available for free once a week. That has been put in permanently. So again, you can pull it 3 times a week. When you go to Annual Credit Report, please make sure that you are typing in the full and exact website into your internet browser. There are a lot of imposter sites. Just make sure you are looking for the logo and that you're in the right place. It is imperative. Before receiving your report, they're going to ask you several security questions, and there can even be trick questions. Just so if someone were trying to pull your credit and it's not actually you, they wouldn't be able to get it right. Only you would be able to answer your personal information. And let me just give you an example. It might say that you opened a mortgage in, let's say, May of 2008. And they ask you the name of the lender. And let's say you've never taken out a mortgage. The answer is going to be not applicable. So keep in mind that these questions are meant to ensure you are who you say you are. So don't panic and go, oh my goodness, I've never taken out a mortgage. Why is it asking me this question? They are there for a reason. They are there because you're the only one that's going to know that, nope, I didn't take out a mortgage. There's also a form that you can use if you prefer to request your credit report by mail. If you don't like using online services, the form can be found at annualcreditreport.com, or you can actually call at 877-322-8228 to receive it. There's also a form that you can use if you, You can call that number. You can also go to annualcreditreport.com to get that form. If you anticipate the need to borrow money, we highly recommend that you review your credit reports at least 6 months prior. So if there's anything on there that is not accurate, you actually have time to correct it before you apply. You don't want to, be surprised when you go into a lender and you apply and they say, hey, what's this all about? And you have no idea what they're talking about. So this just keeps you abreast of what is being reported. There is a law that requires a lender to provide the credit score they used if they actually make an adverse decision to your application. So if they decline you, it is required that they give you a credit score. This includes being, denied for a loan, a credit card, or if you get approved at an interest rate higher than the best rate being offered. We do not recommend ever that you apply for something knowing you're going to be denied just to get your free credit score. As we discussed earlier, applying for credit can actually hurt your score, especially those hard pulls. If you do find inaccurate information, you see something that is being reported that is absolutely false, incorrect, you have the right to file a dispute. First, you're going to want to dispute the item with the creditor or collection agency that reported to the credit bureaus inaccurately. If that does not resolve the issue, you can file a dispute with the credit bureaus that are reporting the inaccurate information. You should also include any documentation to support your dispute and you got to allow at least 30 to 45 days for them to complete the investigation. They do take their time. If you are still unsatisfied, you got nowhere by disputing it with the lender or the credit agency, you didn't get anywhere with the credit bureau. If you are still unsatisfied with the outcome of the dispute, you can still file a claim with the CFPB, the Consumer Financial Protection Bureau. And if you find indication your identity may have been stolen, it is so important to take action immediately. And that's why we really say, don't wait that year. Pull it quarterly, pull it monthly. It's not going to hurt a thing. The sooner you find that someone may have been compromising your personal information, the quicker you can get that resolved and put a freeze on all 3 credit bureaus. Some people do that and they've not even, been suspicious that someone was trying to compromise their identity. This prevents anyone who has your information or gets your information from being able to open accounts or ask anyone to pull your credit. You can typically do this by calling the credit bureaus, or you can actually go online to their website to put that freeze on. But you got to know that that freeze is going to prevent anyone, even you, from applying for credit with your information. So if you do plan to apply for credit, you're going to want to contact the credit bureau and just temporarily lift those freezes. And then once you're done applying and they've pulled your credit, you can put that freeze right back on it to protect yourself. It's also recommended, if you think your identity has been compromised, to file an identity theft report with the FTC, the Federal Trade Commission, at identitytheft.gov. And they are wonderful about walking you through the additional steps that you need to take. They will walk you through every single piece of that. So making sure that you understand what is on your credit report and making sure the information reporting is accurate is important, because your credit report is used to calculate, that credit score. Everybody should know what a credit score is. It's a 3-digit number that uses the information on your credit report to quantify the likelihood of repayment. And what they do is they review how you have managed previous and existing accounts. It's meant really to reflect how risky it may be for a creditor to extend new credit to you. So scores range from 300 to 850, although it is possible to have a 0, especially if you have never established credit or you have that freeze and they pull it before you lift it. The lower the credit score, the higher risk an individual appears to a creditor. So the lower, the higher risk you are. The FICO score, and that's the most widely used scoring model. There is another model called the Vantage score. That is typically used by sites that offer free credit scores. Because there are different credit scoring models, your score could vary depending on where you check it. And this doesn't necessarily mean one is wrong. It just means different scoring models look at slightly different things. So the 5 key factors that go into the calculation of your FICO credit score, which again, we're using because it's the most common scoring model used by creditors and lenders. The largest factor impacting your credit score is payment history. Making every payment on time every month is one of the very best things you can do for your credit score. The second largest factor impacting your score is amounts owed, which includes credit utilization. Creditors want to actually see loan balances going down. They want to see them decrease, not hovering or going up, increasing over time. Credit utilization specifically looks at revolving credit accounts. For example, a credit card, where your balance could go up one month, it could go down the next. So credit utilization looks at how much of your credit limit you are actually using. And the more credit limit you are using, the more risk you are to a creditor. So if you have multiple credit cards, just add up your balances. You're going to divide them by the total of your maximum limits, and that's your utilization rate. So I'm going to say that again. So add up, if you have multiple lines of credit, credit cards, add up your balances, divide them by the total. So add up all your maximum limits, divide it by your maximum limit, total of your maximum limits, and that is going to be your utilization rate. Ideally, you do not want to use more than 30% of your limits at any time. And even more ideally, pay your balances off in full monthly, and you're not going to have any finance charges. You're not going to have any interest. Length of credit history looks at how long your credit accounts have been open. This includes the age of your oldest account, the age of your newest account, and an average of all of your accounts. The longer your credit history, the better. Up next is any new credit. So, which is where those hard inquiries we discussed a couple slides earlier are reflected in the credit score. If you start applying for credit frequently, this can be a red flag to creditors because they start to wonder what is going on that you suddenly need a new credit card one month, a new loan the next month, and now you're asking for another new credit card this month. I think of always the day after Thanksgiving. I especially think about our younger generations and how they could go, to TJ Maxx, to Ross, to Kohl's, to all those department stores that when you go up to pay, they say, hey, and that's one of the biggest shopping days of the year. And your receipt might be really high. And they say, hey, do you realize you could save $160 today? And that sounds really tempting, but that's going to be a hard pull. And then you go to another store and they say the same thing. And it's very tempting. It's going to be another hard hit on your credit score. And the money that you saved, it's not going to add up. It's just not going to add up to the high interest rate that you're going to have on that card. You might walk away and go to 10 more stores and forget that you even got it and forget to pay it. And it's a hard hit on your credit score. Your credit score is going to significantly drop if you do it over and over and over. So another reason to be, really diligent about making sure that your credit score is as it can be. And typically we all need to apply for credit from time to time, right? That is totally understandable. You know, the key here is just being strategic with when you do apply, limiting those hard inquiries to only when you absolutely need it. You know, hard inquiries typically remain on your credit report for 2 years. That's a long time. That is a really long time. So you have to advocate for yourself. Every time I'm asked that, I'm like, no, thank you. No, thank you. And a lot of times they'll keep on and I'll say, what's the interest rate? And they have no idea. They don't know. But I can tell you it's probably 25, 28%. Get a U.S. Senate Federal Credit Union credit card and be on your way. You can't go wrong with it. Although some areas have a larger impact on your credit score, all 5 of these factors play a unique and important role in calculating your score, your credit score. So we are going to look at Angela and Diego again. Bear with me just a second. All right, so we're going to apply what we've learned so far about credit scores. And in this example, we're going to look at Diego and Angela. And for our purposes, again, each of them have the same underwriting. They just have different scores, okay? So they both have credit cards. Diego spends $800 on his card each month, and you can see there his limit is $1,000. So each month when his bill arrives, he pays the entire balance off. He avoids interest charges. Very, very smart on his end. Angela has a $5,000 balance, as you can see. And she also pays on time every month. She never does not pay on time, but she's only making the minimum payments. Her credit limit is $10,000. So her balance is $5,000. Her credit limit is $10,000. She pays every month on time. So that being said, while who do you think is going to have the best credit utilization? Her utilization percentage, Angela's is 50%, Diego has an 80% utilization rate. So while Angela may have the higher score, Diego is in a better financial position. So even though he pays it off every single month, next month he can simply charge less on his card and his score should improve. Angela may struggle to pay down her debt because she's only able to afford minimum payments. So it looks totally opposite when you see it on paper, on the screen, because you think, I pay it off every single month. But when you take in that 30% utilization that plays or factors into your FICO score, you can see now why Angela's is better than Diego's. So my recommendation to Diego would be, you know, raise your credit limit. I mean, just raise your credit limit some. So, and this is why we like to tell you that credit scores are not a financial health score, because really Diego is in a better financial situation than Angela, because she may, you know, get into a situation where she can't pay it off. She only makes her minimum monthly payments each month. So again, we like to give you examples. Hopefully all of this makes sense. So let's talk about building credit. And we already talked about the 3 major credit bureaus, right? So now we're going to talk about, you know, how to actually build your credit. We just talked about Angela and we talked about Diego. So now we're going to turn our attention to, either never had credit or you're trying to build credit following, maybe you've had a setback. It happens. So as you actually start thinking about you need to build or rebuild credit, we always recommend that you start by having goals. Knowing exactly what you're trying to accomplish is going to help you determine the steps that you will take moving forward. We always recommend that you develop a written budget. You got to know how financially stable you are, right? Do you have consistent income? Is it enough to cover your monthly expenses? Do you have at least, several $100s in savings to cover a minor emergency? If you open a credit card or add a loan payment while you're struggling financially, this could definitely end up negatively impacting your credit score. So one of the most common ways to build credit, if you don't have any, is to open a credit card. Using a credit card for a budgeted expense and paying the balance off in full monthly is a great way to start building a strong credit history. A secured credit card, this is something that we do not offer here at the credit union, but we have definitely talked about it, and it could be something that we offer in the future. And that's a secured credit card. It'll actually report to the credit bureau. You actually deposit, let's just say you deposit $300. You would be given a credit card with a limit of $300. And just like a regular credit card, you can use the card. You get a bill each month with a statement, balance, minimum payment due, and you would still pay interest if you don't pay the balance in full. So if you make a late payment, you will still be assessed a late fee. It's just like a credit card. This could still negatively impact your credit score. It's important that you know that with a secured credit card. Your security deposit is only touched if your account goes into default and is not repaid. So other than making a security deposit up front, the key really here is treating a secured credit card the same as you would an unsecured credit card. Keep your balance low, make your payment on time every month to build positive credit history. You could just decide, I'm just going to put my gas bill on there. And you just use that card whenever you get gas, and you pay it off each month. You don't have to put everything on there because you want to remember that credit utilization rate. This is going to build your credit history. And keep in mind, a prepaid debit card is not the same, as they don't report any information to the credit bureau, but a secured credit card, they do. A secured loan is something we do offer here at the credit union. With this type of loan, a deposit is used to make payments on a loan. So, for example, our certificates of deposit, our CDs. If you have a CD, we will actually lend you 80% of that certificate. We'll put it into a loan. You will make monthly payments. So your interest rate is only 2% above whatever your CD rate is. And you continue to earn the dividends on your CD. So it's like a 2% loan. It really is. It's a win-win, and it does get reported. And the loan typically is for the length of time that the CD is in place. So your maturity date on your loan would be the same as your maturity date on your certificate of deposit. A great way to start building credit. You also have two choices when it comes to using someone else's credit to build your own. A co-signer, for a loan, or a joint owner for credit cards. It's important to know, however, that both parties are legally and equally liable for the debt on a joint account. If you plan to go that route, there is risk involved that we want to let you know it's important to weigh and have a clear agreement in place with the other individual. And then an authorized user to a credit card just means you are not considered account owner. So you are not liable for the debt. But keep in mind, any activity on the account will be reflected on your credit, good or bad. So if you consider asking someone to add you as an authorized user, make sure that it's somebody you can trust to make their payments on time and keep their balances low. Remember that credit utilization rate. And then now I want to switch gears a little bit and talk about a couple of the common credit-related myths you may have heard and why they are not necessarily true. The first one is something that we hear a lot, closing a credit card will hurt my credit score. This is more like a half myth. It all depends on a person's situation. So let's take a look at this example. Sarah, she has 3 maxed out credit cards. Since she is using 100% of her available credit, the utilization portion of her score suffers already. We already know that because we learned that in a few slides before. Now she pays off the first card, so her available credit increases. So guess what? Her credit score improves. She then decides to close it, so she is not tempted to use it again. But once she closes the card, her available credit on that card, it goes away. So she's left with a utilization rate again of 100%, and her scores go back down. So remember, the other 2 cards, they're still maxed out. So in Sarah's case, closing her card has actually hurt her credit score. So in Katie's situation, she has 5 open cards, and her starting utilization ratio is great because she's using very little credit. Closing one of her cards will have very little effect on her utilization ratio, so her credit score more than likely will not be affected as significantly as Sarah's, though she still may see just very little impact. So this is a good reminder that credit scores are not financial health scores. Sarah closed that card to remove the temptation because she knew, I have this card, it's got a credit limit, I don't owe a thing, and she could continue charging on it. And yes, her credit score may have improved, impacted negatively, but she made a financially wise decision for herself, bigger picture, right? This is another reason setting goals is an important part of this entire credit history, credit score, credit report webinar. If Sarah's goal is to get her debt paid off and she isn't planning on needing to apply for any new credit anytime soon, her goals can actually help her make different decisions. And if that is her top priority in improving her credit score ASAP, she might either have no reason to apply for credit, and her goal is to get these things paid off. Or if her priority is to improve her credit score, because let's say she needs a new car or she's going to, buy a house, then it would be the best decision not to close that card. So how many of you have heard to not check your credit because it's going to hurt your credit score? I'm sure you have at some point. And checking your own credit report is considered a soft inquiry. It has no impact at all on your credit score. So that's great news, right? Check your own report or score as often as you like. It will not change your score. And it is so important because of what we talked about earlier. Just making sure that everything on your credit report is accurate. This myth is derived from the fact that applying for credit too much can hurt your score. Like we discussed earlier, like the day after Thanksgiving, when you apply for credit, it is considered a hard inquiry, which is totally different from the soft inquiry when you check your own credit score. So don't be afraid to go to annualcreditreport.com and pull your credit. It's really important. And since credit cards are one of the most common methods people use today to access credit, we're going to wrap up our time tonight with just some tips for using credit cards wisely. So having money in savings as a backup so that you can handle, those, it's not a matter of if, it's a matter of when expenses without getting into debt using your credit card is a great place to start. You know, also consider only making one charge a month. Make this charge an automatic bill, like your cell phone bill or your internet. And the reason we suggest setting up only one automatic charge is that you only need to generate activity to build your credit score. It doesn't matter how much activity. And then you'll make sure that you are staying within that utilization ratio. And committing to use the card only for small automatic expenses that you'd pay for anyways, and leaving your credit card at home can actually help you avoid temptation to overspend. So the lower the utilization ratio, the better. We learned that in prior slides. A general rule of thumb is to use less than 1/3 of your available credit. And then for small limits, this means, you know, only charging just a very small amount. So it's important to know both your limits, both your limit and that 30% number. So, and while paying off an account in full does not improve your credit score per se, paying on time is what really matters. We cannot say that enough. Paying on time. Do not pay anything late. Paying off the balance in full can help you avoid paying additional charges, the finance charges. It will also help you to live within your means without, you know, increasing your debt. And then finally, we want to make sure that we say this over and over. Check your credit report. Check your score regularly for accuracy. One thing that I failed to say that I meant to say, you do get your credit report for free. You do not get your FICO score for free. I think the FICO score is anywhere between $6 and $10. Pay that if you want your FICO score. If you really need your FICO score and you're a member here and you have online banking, go in and sign up for our monthly Experian FICO score. It will give it to you completely for free. Just don't go out and apply for a loan just because you want to know your FICO score. More than likely, that lender is not going to give it to you anyways, to be perfectly honest. So if you want to take a closer look at your specific credit situation, if you're a member, you are welcome and encouraged to call GreenPath Financial Wellness. They will do a free confidential financial assessment for you. They have certified counselors. I cannot say enough about them. They are amazing. It is completely confidential. They can even pull that credit report, your credit report for you. It's a soft pull. They're not going to charge you anything, and they can go through step by step and tell you what's on there and say, is this correct? Do you remember this? Do you know this is on here? And just help you that first time. And if you need help with building your credit score, improving your credit score, they can look at that. They have a wonderful budget sheet that they can help you take a look at your budget. They can collaborate with you to develop an action plan just to help you work towards your financial goals. We want you to be financially well. That is our goal here at the United States Senate Federal Credit Union, that our members are financially well, and we will do anything we can to help you, you know, live the financial dreams that you want. You know, get a home, get a car, have a credit card. So GreenPath is there for you. We are there for you. And we just want to say thank you so much again for spending a little bit of your Wednesday night with us. And hopefully this has been beneficial. We hope that you always take something away that will help you, your family, your friends, your neighbors be financially well. So I'm going to turn it back over to the panelist team. Thank you, guys.
Awesome. Thank you so much, Kim, and welcome back. It feels like you didn't skip a beat, so that was an amazing presentation. I know there was a lot of interaction going on in the chat and also in the Q&A. So I don't wanna hold those questions any longer. So Ms. Londono, if you don't mind, let's go ahead and tackle those questions.
Thank you so much. And thank you so much, Kim. It's good to have you back. So the first question is, do inquiries reduce your rating?
I'm not sure I understand the question. Do say that one more time for me.
Do inquiries reduce your rating?
Do inquiries reduce your rating?
So, from my understanding,
Thank you, Milton.
every time, so the question is in reference, and please correct me if I'm wrong, but what you mean as inquiries is every time you apply for or trying to see if you are qualified for a particular loan, if the this disclosure says that it's going to be a soft pull, then it won't. But if it's otherwise, then yes, because it will go in as a hard pull. It truly, if it doesn't, if you don't see the disclosure to saying that this will not impact your credit, and if you want to see if you're qualified for a particular product, then the answer to that is yes, absolutely. And that inquiry is going to be in your credit for a couple of years until it falls off. And it will lower your credit score as well too. So in essence, it will be a hard hit to your credit file. So to, again, if that's what you meant when you were talking about inquiries, just, again, be sure that you read the fine print before you submit any application. Again, soft pulls will not have an impact, but if you don't see that word soft pull, or oftentimes companies will tell you, check your score, check if you're approved without having an impact on your credit. And if that's the case, then there will be no. But if you don't see any of that in writing, then most likely that will become a hard hit. And absolutely, there will be a hit to your credit score, and it's gonna drop it.
Thank you so much, Milton. And our next question is, do you have slides with who to contact to let anyone know about a possible ID fraud slash theft, thief, FTC, et cetera, et cetera. And with that question, there's another question. It says, are credit scores provided monthly by various credit card companies accurate, like USFCU, Chase, Capital One, etc.?
Yeah, so that's another great question, Andrea, and thank you so much. So to answer your first question, Carrie, keep me honest on this one, but we are going to share the copy of this presentation, correct? And that is going to have the resources where to reach out to if you suspect your identity has been compromised. It will tell you, and I mean, I can tell you right now, you will want to go straight to the FTC. That's ftc.gov. It's a great way to start, but you'll have a copy of this presentation. It's going to have more tools there for you. And the second part of your question, that is a tricky one. And the reason why I say tricky is because it depends on what loan product you're trying to obtain. And let me clarify a little more on that. So if you're applying for a car loan, there's a different a lot of dealerships will try to use a different credit rating system that they use, that it's heavily on your that is heavily on the auto lending side, if that makes any sense. So that credit score will probably be different than what the score that you see for those that have Credit Karma. I'm just throwing a popular credit company up there. And it will be somewhat similar to the one that you get from us for free. But in kind of like, flipping the script on that end, if you're applying, let's say, for a personal loan, a credit card, most likely that score that you see there is what's going to determine where you stand in terms of your credits. So that will be very accurate. I know mortgages is another one too, that they a lot of lenders use a different scoring system when it comes to credit for mortgages. So it all depends as to the type of product or the type of loan that you're trying to obtain. But for the most part, the one that you get from us or the one that you see on Credit Karma, if you're applying for a credit card, personal loan, something that is very common, it's going to be very accurate. But once you start getting into like I stated, like a car loan or a mortgage, those lenders sometimes they will use something different. Not too far apart though. Because if your credit, especially if your credit is above 730 and above, chances are that you're going to also do pretty well in those two different systems that those two different lenders might use when it comes to those specific products. So hopefully that answered the question. I know it's a long answer, but it truly there's a lot behind the scenes that you may or may not know.
Thank you so much, Milton, for answering that. And our next question is it a good idea to keep our credit card or to keep a freeze on our credit cards until needed? And if you already stated that, my apologies, but how many days should one take the freeze off before they plan to have a credit card run for a loan?
Great
So
question.
yeah, you got it, Milton? Or do you want me to take it?
Okay, go ahead. I already
Okay.
answered.
Yeah, you did. Thank you. So the question is, what I'm understanding, about the credit freeze and how many days in advance before you apply for credit should you take that freeze off? Am I understanding that correctly, Andrea?
Yes, that's how
Okay. So I've actually taken many loan applications for our members who had a freeze on their credit report. And I said, looks like you have a freeze on your credit report. They actually go into the system and release that freeze right then and there. It is instantaneous. So yeah, real quick, real simple. If you have a PIN, some credit bureaus will give you a PIN that you can use to unfreeze and freeze your PIN. You can also provide that to your lending officer if you want them to release it and then put it back on themselves. I hope that helped.
Good day. Thank you so much. And this next question is kind of similar to the one before. Is it a good idea? Is it a good suggestion to put a freeze on your credit card anyways?
Yes. Absolutely. Absolutely. Be proactive. Keep yourself from ever being in a situation where if your identity was ever compromised, they could never go in and apply for a loan or apply for an application.
Thank you. And our next question is a balance in medical bills affect your credit?
So medical debt is not reported on credit bureaus unless they are sent, like we talked to in the presentation, sent to collections, and then that collector most likely will report what you owe. It will be reported on your credit report, and it will absolutely impact and factor into your credit score.
Thank you. And our next question is, can you go over how to figure the credit utilization rate factor again?
Yeah, sure. So if you have whatever you have that is open in line of credit, you can continue to borrow. So it's going to decrease, it's going to increase as you borrow. Let's say you have multiple credit cards. You're going to add up your balances. So how much do you owe on each one? You're going to add that up. You're going to divide it by the total of your maximum limits. And that's your utilization rate. So whatever limit you have, you're going to add that up. You're going to add up what you owe. You're going to take the balances and divide them by the total of your maximum limits. That's going to be your utilization ratio. I hope that helped.
Thank you so much. And does medical debt get reported or only if it goes into collection?
Yeah, we just answered that one. Great question.
So if you have to have consistent debt to acquire an excellent score?
So we talked about all the 5 things that factor in. I mean, it really is a balance. They're going to look at your credit history. They're going to look at that credit utilization ratio. They're going to look at the oldest account you've had. They're going to look at the longest account you've had. And again, this slide presentation is going to be provided to everyone on the call. Your credit history, making those payments on time, is the #1 highest percentage of your FICO score. So making your payments on time, keeping that credit utilization at 30% or less. Those are truly the things that are going to help you to have the best score. If anybody wants to add anything, please feel free.
Thank you so much. And our next question or statement is, leaving your credit card at home is tough to do, but definitely makes sense.
Oh, I love that. Yes, it is so true, especially on the day after Thanksgiving. Leave it at home.
Yeah.
Thanks for saying that.
I think this one was paired with the first question about the do inquiries reduce your rating?
So absolutely, if it's a hard inquiry. So if you're applying for a loan and a lender pulls your credit, it's a hard inquiry. It could impact your credit score. Soft inquiries do not. So going to annualcreditreport.com, pulling your credit report does not impact that score. I hope that answered it.
I believe so. I'm sorry, I was frozen for a minute, so I lost what you said. And the next question is, what is a good credit score? What is an excellent credit score?
I can take that one, Kim, if you want.
Thank you, Milton.
No worries. So for most lenders, a great credit score is going to be anything over 700, more specific, 730 or above. That it's guaranteed that you're gonna receive the best interest rate available for you, whether it is that you're looking for any type of lending product, if that makes any sense. So 730 and above, obviously 850 is the perfect score for anyone. It's out there, believe it or not. There's a small percentage of individuals that do have a perfect credit score. But again, you don't have to have a perfect credit score, which is an 850. As long as you have 730 or above, that is guaranteed. It's going to give you the best rate possible for the majority of the lenders. Now I know there are certain institutions that they set the bar a little higher. That might be a little different, but I will tell you, I've been in this industry for going into my 18th year now, and 99% of the financial institutions that I work with or have been related to, 730 or above will get you that perfect score that you want, the best rating in terms of the rates that you can have anyone can possible.
Thank you so much. The next question is, if I increase my credit limit and use the same amount of credit, can I increase my utilization?
Absolutely. I mean, I think that's kind of like and I think Kim is showing that right now here on this particular slide. So if your limit is increased and the utilization, as long as you keep it right below that 40%, that's the ideal sweet spot that where you want to be. And again, making those monthly payments, right? So don't be. I believe one of the examples that Kim showed here was for somebody that that has the same limit and uses the car a lot more, and almost touches the limit and then pays everything in full, but somebody else that has a similar limit but only uses half of that, so the utilization rate it's a lot lower. So that means that there would be a much better credit reporting for this particular person versus the one that almost touches the limit. And even though they paid in full, at the end of the day, what gets reported, it's your realization. And so be mindful of that. Again, the key here is to, and I know that the example that Kim showed, it puts you at 50%, but if you keep it below 50%, ideally, what anyone would recommend in our industry would be 40%, trying to keep it up under that and make those payments on times and never pay the minimum. Always try to pay a little more than the minimum. It just goes a very, very long way, especially if you are in the high 600s and you're trying to get over to the 700 credit score. Trust me, you do that for 3 months and you will see the difference paying off after month number 4, which most credit companies can take up to 90 days for them to do a full update on all your accounts. So and that's another thing too. So 3 months is kind of like the sweet spot for most financial institutions when it comes to reporting your credit to all the different bureaus. And there's always a delay. So again, that's the reason why the 3-month rule is very important. So keep that in the back of your head. So if you do, you switch your patterns and then you've been doing it for 2 months and you don't see an improvement on your score, don't panic. It's completely normal because it could take up to 3 months. And then you'll start seeing the positive reporting into your credit and the score going increasing for you. So going up in a positive direction.
And while we're talking about that, just with the slide that I have in front of me, Diego should never have a balance of more than $300. Angela should not have a balance of more than $3,000. That would keep them both in that 30 to 35% utilization ratio. That may help as well.
Thank you, Kim.
Thank you. And our next question is, Capital One sends monthly emails with credit-wise info reflecting plus or minus. Can I remove myself from this? If so, is it bad? Is it a bad idea to drop credit-wise?
I'm going to be honest, I have no idea what credit-wise is, and I've never even heard of them. Absolutely, you can opt out.
Yeah, I was gonna say that I actually have a Capital One card myself, and it's a voluntary program that they have. It's just like how you opt in, you can obviously go ahead and opt out. If it's complicated, I would just say call the number in the back of your card. They should be able to assist you with getting you unsubscribed to CreditWise. But CreditWise it's kind of like it's the Credit Karma, but it is related to Capital One. So in essence, it's another company that keeps track of your credit scores and pretty much does everything that you will see on Credit Karma or Experian. I mean, just to name a few, but it's pretty much they're related. They're all do serve the same purpose, if you will, trying to help you with your credit score, understand where what are some of the things that you might work on, letting you know that your credit has dropped or it has increased. I mean, it's another company that it keeps track with your credit. Again, there's not your credit score will not be impacted by them pulling your credit, so don't have to worry about suffering having your credit score drop just because you are subscribed to CreditWise. That's not the case. But again, it's just if you don't want to get those reports, if you don't want to get those alerts every month or showing on your credit card statements, just give them a call and they'll be more than happy to unsubscribe you to those services.
Thank you so much. And our next question is, if a challenge debt was removed or from your credit with lawyer assistance, can the creditor wait and then try to get you to pay the debt later or repost to your credit?
Ooh, that's a very tricky question. That's more of a legal question. I don't think we can definitely ask this question with to our legal department and see what their answer might be. So this might be one that I won't be able to answer. I don't think anyone in this panel will be able to answer because it is definitely a lot of a legal behind it. And we're not lawyers, so we can't really get into it. But we do have an amazing team at the credit union, right, Carrie?
Yeah, and I feel like that question is perfect for GreenPath too.
Absolutely, yes. So that could also be another avenue as well too.
Thank you so much. And our next question is, what's your personal opinion on credit repair companies? My balance on my credit card was paid in full. However, the history of late payments remain on the report. This seems like it could affect persons
I think you froze again.
or
I
maybe
think you froze again, but I think I see
on
that there. Andrea, I think you're freezing again. But Kim, do you want to take that question or?
Yeah, well, I was going to say, let's all of us go off mute. I'm going to count to three, and we're going to say the same thing at the same time. Ready?
Go.
One.
You're on mute. You're on mute, Kim.
That's funny. All right. Did you hear? So I said I want all of us to go off of mute. We're all going to say it at the same time. I'm going to count to three because
Go.
they're asking which. Somebody help me because I can't see the chat. They're asking which.
Credit repair company.
Yeah. What credit repair company? So are you ready? Panelist
Go.
team, are you ready? One, two, three. Green Path.
Path.
No,
All right.
that's not
let's
credit
go.
repair.
Oh,
Is
they
it-
don't do credit repair, Carrie?
Well, I mean,
How
that's
can
a
you not?
nonprofit and the only reason I say well they is because they do like debt management and stuff, but credit repair company is because we wrote an article about it on
Yeah.
Saturday for the USSFC weekend. And there's a lot of stuff and false claims that credit repair companies make that there had to be laws made and stuff. But that you can actually do a lot of that stuff yourself instead of paying for a credit repair company.
And
Like
that's a
I am so sorry, you guys. I
same,
thought for sure Green Path could lead you
it
down
can
that
definitely
path.
help you.
Oh yeah, so absolutely. So Greenpath will absolutely help you in trying to build your credit back up. But I do know because I see ads coming on social media, different companies saying, "Hey, it is your credit, in the 400s, 500s. Give us a call, reach out to us, and then we will have your credit in the 700s in 2 weeks." Insane. Don't believe it. Oftentimes, those are just clickbaits, and a lot
Don't
of
believe it.
that they will do is, in essence, like Carrie stated, is something that you could personally do. Because what will happen is they will dispute if there is something on your credit report has a valid dispute. You are able to do that yourself. Honestly, and it's pretty easy. You just reach out to the different credit bureaus and again do it yourself, and if it's a legitimate dispute, it will be removed, and then you're going to see an increase in your credit score. However, if somebody is promising you that they're going to fix your credit, they're going to get you in the 800 credit score, but you just got to pay them $500, $1,000. Really? Is that really going to happen? So be very, very careful. There's a lot of those type of small companies that are, trying to take advantage of the situation, especially if you're in the market trying to buy a house and then you're scared that you might not be approved for financing on a mortgage or even a car. And again, they will take advantage of you if you're not careful. So please do your research pretty well. But in most cases, if you think about you needing to do credit repair, you are more likely to do it yourself or reach out to GreenPath. GreenPath, they have great resources, a lot of great tools that can assist you, and you will be in good hands. And I see Mr. Stan or six panelists. You're coming off mute. So anything that you want to add to that specific topic?
This might have been some things earlier, but I had to step in and out for a few minutes. But I was going to mention on the credit bureaus, there's actually a fourth credit bureau too. It's called Innovis. I don't know if you guys have ever heard of it on, but they don't give credit scores, but mostly consumer information. So one time I was sent an email from Innovis and I registered with them as well too. because I wasn't sure sometimes if it, but typically the three that you saw earlier, Equifax, TransUnion, all those are the main ones. And I do notice from time to time when I apply for a credit card, before I apply for the credit card, I make sure I unfreeze my credit card. I do what is called a thaw, which you guys already talked about. And yet generally once the credit card's approved, I put it in the system for just basically for about a week. Once I know that I've been approved, sometimes I know the same day, I go back and I unfreeze the thaw, because the thaw is the day you do it, it starts from midnight of that morning. So when you unthaw your credit, even if it's 2 o'clock in the afternoon, it dates it back to 12:01 that morning. So just kind of a thing is, if you're applying for credit cards or anything like that, unthaw it first before you apply. Once it's been approved, go back and just remove the thaw and put it back on, or put the freeze back on. So I just did it last week, so I am very familiar. I get in all these
Yeah.
credit bureaus all the time, and no
And
sense in leaving it out for a whole week if you thought it was going to take a week to get approved.
Yeah, no, and that's a great tip. Thank you so much, Stan. And I know that's Innovis is a kind of it's a new company out there, and a lot of it's becoming a lot more popular now. So it's getting a lot of popularity. But yeah, like you said, it works wonderful too. So make sure that you take advantage of that great resource. And I believe someone is asking for the right spelling on the chat. I believe that's the right spelling. Mr. Stan, can you confirm that? Innovis,
And
Innovis.
no, it's Innovis, Ovis, Innovis.
Oh, okay, perfect. Awesome.
Yeah,
Thank you so much.
thank you.
All right. What other questions do we have, Andra?
So the next one is the mistake I see are usually addresses where it claims I've lived but haven't, and other names for me, such as showing me my husband's last name, even though I never took his last name. That's for
I believe that would be more where if you're trying to apply for something, and the system that you're applying to is going to ask you for security questions, and that is correct. In essence, it's just trying to verify, make sure that is really you the one applying for that specific loan, and obviously it's going to throw you addresses or perhaps even names that you don't use. But again, it's mainly to protect yourself from somebody else getting into your credit. And I believe Kim, keep me honest on this one too, but I believe that's kind of like where this is going. That anytime you try to apply for a particular loan, and if for some reason something was flagged as potential fraud, then the system itself will create challenge questions that you might see pop in front of your computer, or you might receive a call. Like for instance, us, we will give you a call and tell you, hey, we want to make sure I verify your identity, but we have this questions that we need to ask before we can proceed. And some of those questions that you will be asked will be those type of questions. So addresses where you probably never lived before, or even names that might be somewhat related to you, but really, if you haven't used those names, then you should be fine as long as you select or give the proper answers. But that's a great question too.
So I was just going to add, if you are referring to the credit report actually states these things, that is where a creditor has reported in error, and that happens. They can report things in error, and that's where you are going to want to reach out to one of the credit bureaus, whichever one is reporting your name wrong. If you're not referring to the questions, if you were referring to the security questions, Milton said it perfectly. If you're referring to something that is reporting on your credit report, that's where you are just going to call them, say, hey, my name is wrong. I never took my spouse's last name. You're probably going to maybe send them a copy of your driver's license, and they'll get that corrected immediately. Usually takes about 30 days to see the correction.
Thank you, Kim. What else we got? I know there's been a lot of questions. Andrea, do we have any more questions?
She's frozen again.
I
So
know we.
I just
She's
see a
frozen.
couple. I'll read them if that's okay.
Yeah, go.
So we have a guest trying to understand the length of credit history. She's over 60 years of age and has had credit most of her life, but Credit Karma says her credit age is 4 years and 9 months. Can you
Oh,
explain that?
absolutely. That's a great question, by the way. So remember, credit is not based on what your age is. It's based on how long have you had your credit account. So let's say, for example, I'm gonna lie to you, everyone, right now. So I'm 21, and it's gonna tell you that my credit history is 10 years old, and I'm gonna go, really? I started credit when I was 11. Is that even possible? And to answer the question is yes. So if when I was 11 and my parents opened a credit card and they added my name as an authorized user, that automatically creates history for me. So fast forward to the opposite, right? So let's say I'm 40 and it's Credit Karma or any of those bureaus and companies is telling me that my oldest credit, the age of my credit is only 3 years old. I'm gonna go, really? But I'm 40 and I have had credit for many years. But what happens is, if for some reason you had closed some of your accounts and opened new ones, the system is only going to go back to the oldest credit line that you have opened. So if I open a credit card 3 years ago, but I have many credit cards in the past, but all of those cards are closed, so I lost all the history. So that history is gone. And so the age of my credit is going to be only 3 years because that's the card that I currently have, and that's how long it's been open. So most lenders will only look at the history of that I have on the credit card that is actually open and ignore anything that has been closed. So hopefully that answered the question. I know that's kind of a tricky one, but in essence, it doesn't matter your age, but it matters when and how long have you kept your longest trade or your longest account, if that makes any sense.
And I believe, did you guys answer this one? Recently, my credit card was compromised and charged $2,000. I reported it to the bank. They refunded my account. Will this affect my credit score?
It shouldn't. And
No.
this is a perfect example of filing a dispute. And something that you can do, please do not hire a credit repair company. Do it yourself. Just go to the 3 bureaus, initiate a dispute, and they will ask for probably anything that you can that you can provide as evidence that it wasn't you. Then just showing the report, showing the claim that you did and that you filed, and that will fix it for you. So if it shows there that you had that and it's impacting your credit, again, file a dispute. Once you do it, it's going to get fixed.
I believe we got them all.
There was one question. It was, if time permits, can you explain the difference between FICO score and credit score, and if FICO needed, or is it always factored in any type of loan?
Another great question. Kim, if you don't want, I can take it too. Kim? All right. I'll take it.
Sorry. Go ahead, Milton. Thank you. I thought you were taking it.
Yeah, no worries. So just so you know, a credit score and the credit score and the FICO score, the difference is that one is the credit risk and the other one is the credit score. So the credit score, it's pretty much what you have, and the FICO is the risk that you possess to any lender. So very similar, but in most cases, there's a chance that your FICO score is going to be higher than your credit score. And again, it's nothing insane, but most of the time it's go hands in hand. But one is the risk and the other one is the score. That is the difference between it. If I could explain it to you, the credit score is the score that I have built, that I have created, and the FICO score is pretty much just what risk do I bring to a lender. So again, it's combined. It's almost like, again, it would always, most likely, most of the cases, there will be a little bit of discrepancy between the score. Your credit score and your FICO score will never be the same. One will be lower than the other, and most likely your credit score will be, and your FICO score will be a little higher. But again, most of the lenders will use FICO. So if that answers your question, keep an eye on your FICO, because FICO is what most of the lenders are going to look at. Because again, that is the rating or the risk factor or the risk number that most lenders will look for when you're applying for a loan. Hopefully that answered it.
And Milton, there was one that I answered in the chat, and I just wanted to read it out loud. And actually, it's perfect because somebody just asked to follow up to it. So please comment again on the way to access your FICO score through USSFCU. So this is something that you can do in online banking. So log into my.ussfcu.org or sign in through the mobile app. Navigate, I think it's to the very bottom of the menu on the left-hand side. So it's called Experian Credit. So select that and a screen will pop up no matter how many times you log in, it still pops up. It says click proceed to access your FICO score. Click proceed, and it's right on the first screen. It comes up, and then they've got a whole bunch of other resources there, but your score should be front and center right there. Mine's a 735.
Awesome. She's got a perfect score.
Thanks, guys.
A great credit score. So thank you. But what a presentation again. Thank you all so much. We have gone 30 minutes over time. This is probably one of the longest webinars that we've done. But again, it goes to show you that this is a topic that anyone can relate to, and it's such an important topic. Eddie, do you want to remind us what is the topic? And by the way, you've been quiet. Since 7 p.m., you've been very quiet, but can you remind us what is the topic for next week's webinar?
Of course I can. Thank you so much, everybody. Panelist team, you all do such an amazing job. Even though I'm part of the panelist team, I always learn something new. So thank you so much. Mr. Stan, we appreciate all the knowledge that you bring, the wisdom, and and the interactions as well, because you always share those life experiences when it comes to these topics. So thank you so much. And as you saw for the other attendees, just like Mr. Stan comes on mute, if you ever want to come on mute and share comments, share any questions, or you want to just say something about the topic at hand, please don't be shy. We'll give you the mic and we'll give you the spotlight for you to make your comments as well. And then, as you saw, Carrie was very confident with the information that she shared. She was sharing like her screen on her phone. And why is that? Is because here at the United States Senate Federal Credit Union, we are so confident about making the top priority, which is your security. And that's the reason why next week we're gonna talk about scam proofing your life. Practical ways to stay protected. As we know, fraudsters are getting, all these, they're getting different technologies, different strategies, but you can be confident like Carrie, saying her credit score like there is no tomorrow, and she's confident that we're protecting you as our member. As you know, Carrie, I don't know if you know this or not, but she's a member of USSFCU, even if she works here, but she's also, she puts the hat of a member as well. And that's the reason she's confident, because there's so many ways here at our credit union that you can protect yourself. So next week, March 18th, I can't believe you're saying March 18th, guys, already. The first quarter is almost, to the end. Please join us 6 p.m. Eastern time. We're excited that, these webinars are getting more engaging, more interactive. So please join us next Wednesday to learn something new as how you can be ahead of the game when it comes to these fraudsters. So thank you so much, everybody. We appreciate each one of you. Milton, Kim, Andrea, Carrie, thank you so much. And Mr. Sand, you're part of the panelist crew at this point. So I just want to say thank you so much to everybody. Please be on the lookout for the recording if you were not able to watch the whole webinar live, or if you want to share the link with others, look at us up on YouTube, USSFCU. We have so many reels, we have so many videos, we have podcasts as well. So check us out in all your social medias. Thank you so much. Have a great evening and enjoy the beautiful weather.
You're right.